So let me start. So I just wanted to update you guys on interest rates and kind of how mortgage underwriting is going. So we had more changes this week. Well, since our last call, Fannie Mae decided that it was a little bit too tricky to get appraisals done these days. So for certain loans, appraisals are no longer needed. So if you're buying a property with 20% down, if you're doing a rate and term refinance, meaning you're not taking cash out of your property, I'm trying to think of the other, I don't have a chart here, but basically those are the two ways. If you're buying and you have 20% down, even if you have a little less than 20% down, I've gotten a few approvals where we're just doing a type of Zillow appraisal. It's called AVM, and what we do is there's a data bank of appraisals, and they do a radius search just like Zillow. And if you're within a certain tolerance, they say, okay, the Fannie Mae approval says, okay, we agree with the value that you've come up with, no appraisal needed. So we're getting that answer on our, what they call DU or desktop underwriter. That's like Fannie Mae's portal that we enter information and it kicks back whether it approves the loan or not. And then underwriters are not allowed to override it unless you garbage in, garbage out it. And in which case, if you put something wrong data into the system, then of course an underwriter is going to catch that and say, okay, you need to fix this. So that's one thing that happened last week. And then this week, unfortunately, or late last week, Fannie Mae said that for self-employed borrowers, they want proof that self-employed people's income has not gone down through this pandemic and social spacing. So the problem is, as we know, a lot of restaurants, a lot of face-to-face type businesses have either shut down or gone to minimal minimal contact with the public, which means a ton of people got laid off, which means that if you were, let's say, a service worker getting tips, you technically are self-employed because a lot of your income comes from those tips, or bonuses for salespeople, same thing. And so Fannie Mae said 10 days before the note is drawn. So before we draw docs, 10 days prior to that, we have to get proof that the income has not changed, which is tough because for most people in those industries, it has changed and dramatically. So some banks are being even more restrictive, and they're saying we have to verify this 3 days before the date of the loan documents. So that gets even trickier. So I've had to ask people for updated pay stubs. I have a couple of restaurateurs I'm doing loans for, and so obviously their income has changed drastically as the owner of the restaurant. And so just beware, if you're a realtor or if you're someone who's self-employed or in sales applying for a loan, you may have to reconfirm your income through this process until this coronavirus shutdown is over. So lastly, the loans that are what we call conforming loans, Fannie Mae and Freddie Mac rates are still really great, 3.30 points on a 30-year fix. Like, that's almost free money, right? But the jumbo loans have basically evaporated. So if you are trying to buy a home where your loan is above $765,000, or if even if you're buying a duplex in the millions, you're going to need to really research those loans, and obviously I can do that for you. But anyone who applied for a mortgage 30 days ago and thinks they're pre-approved should go right back to their lender and make sure that they are indeed approved, because you may be approvable, you might be fundable, but if we don't have the money, that does no good, right? So we have to go back and make sure you can get money. And some commercial banks, along the same line of thought here with loans, some commercial banks are still lending, but they're obviously very cautious, especially on residential multifamily buildings, what we'll call apartment buildings, because they know that some of the rents are not being paid. So they're being more cautious, which means that they're either cutting back the amount of income that they see on your tax return if you're refinancing, or if you're buying from a seller, they're going to want proof that the current rent roll has paid for April. So that's kind of, usually you don't have to prove that. So they're also double checking that income hasn't dipped drastically, because you could have lost half your rents over the last couple of months. And so they need to make sure that the cash flow is still there. And they're scaling back. So let's say normally they would let you put 20% or 25% down. They're going to make you put 30% down. They're requiring more equity position from the buyer. So, so just keep that in mind if you're shopping for shopping for an apartment building to buy as an investment property. I was just reading in the Bloomberg this morning. I didn't have a chance to verify this data, but they took it from, where was it? They said, the National Multi-Family Housing Council. So that's, one of those things you could join to get data. And so they gather data on residential apartment buildings. And so they said 69% of renters paid their rent April 5th compared to 81% in March. So there's been a drop in timely payments, but that's the first 5 days. And that's usually an indicator. Most tenants pay in the first 5 days because they don't want to pay the late payment. But yeah, and so as investors, we have to keep like closer tabs on who's paying and who's not, so that if people aren't paying in April, that means we're coming out of pocket for the mortgage possibly in May, right? So you want to make sure that you keep a lot of cash position going through these couple of months in case you do have to step up. Another thing that people think is that it's automatic that you're going to get your mortgage under forbearance, and that's not. That's the rule they made was HUD said in their lending, the loans that they cover will be in automatic forbearance for 3 months. All other loans are not automatic. So you want to be careful that you don't assume that you just don't have to pay. And that's kind of what the fear is in the multifamily arena, is people are fearing that tenants here, you won't get evicted. Tenants here, you don't have to pay your rent for this time, but they will have to catch it up. So they're creating a bigger problem for themselves if they just decide not to pay. And then we as landlords are going to have to figure out how to put them on payment plans, how to get them back on track. Maybe some people will never get back on track. If they can't pay 1 month, they probably can't pay 4 in a lump sum. So keeping tabs on your tenants and where they're at, making sure they know that you're open to helping them through this and all that kind of stuff is critical at this time. So that's it for my lesson. Terry, you had a question?
I'm sorry, I didn't mean to interrupt. I was looking at like the loan on our house here, and I was just checking different creditors to see what kind of policies they had. And for the loan on my house, they said that you might be able to get a forbearance, but they would report it to the credit agencies. Is that standard?
Yep.
Okay. I mean,
just like a short pay, back when people would ask lenders to take less than what they owed on a loan, they, they report that, right? So any change in terms will be reported to the credit bureau. And then the other thing is, keep in mind that if let's say you have your loan with Bank of America, right? And I'm not picking on Bank of America, but they're big enough to where this will make sense. So if you ask for forbearance from Bank of America, and then you go to apply for a credit card with Bank of America, that's going to be automatic turned down. So you don't want to ask a creditor that you have a lot of business with for forbearance or a deal or whatever, however you want to call it. Like credit cards, you can ask for, oh, shoot, I didn't realize all these people were waiting. Sorry, guys. So you don't want to ask for forbearance if you know you're going to continue to do business. We had actually another loan officer in my office had their refinance turned down for this one client because the client, unbeknownst to this loan officer, the client had called that same lender on a different property that they had financed with that lender and asked for forbearance. It's on a rental, right? So they called for forbearance on their rental property, and this loan officer didn't know that. So he goes all the way to loan approval. They do a check in their system to make sure, and sure enough, they found that he'd asked for forbearance and turned down the loan, because they figure, why are you asking for a new loan if you can't handle your old loan? Like, that's their mentality as a lender, right? So be careful. Don't automatically ask for forbearance. Make sure that you really need it. Try and hang on, because it will affect your credit, and it will affect you. It could close some doors for you with the lending community. So just be aware of that.